Hello, in this video I'm going to teach you how to trade crypto futures from start to finish on ByBit. We're going to go through how to navigate ByBit as a trading system, how to enter into trades and get our risk management on point, looking at how to set your leverage ratios, how to enter stop losses and take profits when you trade as well, and then how to manage our positions. This is your complete guide, so check the timestamps in the description and to get to the section that you want. Also, the link to ByBit is down in the description. If you don't have an account yet, just go down there, click there, go through the sign up, and then you can follow along with me. They usually have some sort of sign up bonus or deposit bonus as well, which you can see when you click that link to see what you can get at the time. All you need is an email, you don't need any KYC for now. Let's come over to ByBit then and on the main page. I think you just click start trading now and it will take you through to sign up for an account. Like I said, you only need an email. This will be the dashboard that you come to. Now I have a beginner's guide for ByBit, so you can go and watch that if you really want to know how to set up your account and everything. But really we're going to focus on actually trading futures and how I would go about that. So the first thing we need to do is make sure that you get some money in your derivatives account. So you can obviously deposit and then transfer every cryptocurrencies over from your spot account, which is, the cash account over into your derivatives account. So you'll need something in here to start trading. And then we can actually go on and get into the futures screen. So you come up to derivatives and there are a few different options. I'm just going to click into the derivative screen to actually get these options up for us. So when you're on the screen, you can choose from the options up here. So what we have now is the Bitcoin, US dollar, Tether, perpetual market. So the vast majority of cryptocurrencies on ByBit trade against US dollar, Tether, or just simply US dollar. So what we can see here is just searching them. So we're actually adding a lot of cryptocurrencies over time, but you can see we've got either right here, and you can just search for the other ones like ADA. We have an ADA market. We're going to stick to Bitcoin. So really what I want to go through is the different types of cryptocurrencies. So there's a few different ones. Whatever your market is, there's a few ways to trade it. The first is a USDT perpetual. This means that the future that you're trading or a leverage product that you're trading is perpetual rather than having an expiry date. So futures are very different to the spot market, and what we're actually doing here is trading a contract, and so that contract can either have an expiry date or not. Obviously, perpetual means that there's no expiry date, and so we're not trading for a certain time in the future. We're just taking a bet either one way or the other, long or short, and the future that we are trading will have no expiry date. USDT perpetual means that the asset that you're using to fund our futures contracts and our leverage is US dollar Tether. So that's really important. So most people will use a stable coin like US dollar Tether to fund their futures bets because it's stable and they're using it as collateral. So you need some money on account to actually fund all of your positions. Most people use US dollar or US dollar Tether because they know that the value of that isn't going to be changing every second, unlike a cryptocurrency. But you can do that. You can come to inverse perpetual, and this is actually using cryptocurrencies as the collateral you need to fund all of your positions. This is way more risky because essentially that you are doing is funding your positions with a crypto that could very easily change in value down 20%, down 30%, and so the amount of the collateral that you actually have an account obviously can change a lot if you're using a cryptocurrency to fund your bets. Also, if you're going long Bitcoin, for example, and you have Bitcoin as your collateral, then obviously if the price comes down, not only is your collateral reducing in value, but your position is also coming down. It's like double trouble, so most people therefore use a stable coin to find their bets. Inverse futures, these actually have an expiry date on them. So you can go in and trade these if you like and actually trade towards an expiry date, but we're just going to stick with USDT perpetual right here and then just stick on Bitcoins. So what we have now is the Bitcoin market and most popular market, right? So US dollar Tether against Bitcoin Bitcoin with using US dollar Tether to actually find our bets, and then we can go long or short on this currency pair. One massive difference trading futures and trading leverage as opposed to just buying and holding spot settled cryptocurrencies is that, like I said, it's a contract, and so you never receive the actual currency that you're trading. This is just a synthetic contract where you exchange the difference between when you open and close your positions. Because of the way the futures are actually created, and obviously they get their prices from the spot market, they have this thing called the funding rate, which the spot market doesn't have. When you open a position loan, you have to pay money to have that loan, because what you're doing is essentially putting money on the account as collateral, and then what you're doing is basically borrowing money to actually leverage up your bets. So you can have leverage. Let's say you have $100 on the account and you have 10 times leverage. You can open positions worth $1,000, right? Because 10 times 100. When you do that, of course, you're borrowing money from the broker or from the short. So if you're going long, you'll trade against someone who's going short. So you actually pay them money, so you're paying this funding rate. So this is really important to know that when you go long, you're paying a funding rate. You can see the funding rate is 0.01. It actually refreshes every 8 hours. What that means is that longs pay shorts every 8 hours, and they pay 0.01% of the amount that they're going long, and then the money that they're borrowing. If you go short, you actually receive this funding. So this is an extra bonus if you go short. Longs are going to be paying you 0.01% every 8 hours. 0.01% every 8 hours comes out at a daily amount of 0.03. If you analyze that, that's an 11% APY that you're paying to go long, right? But essentially you are paying 10% as an interest rate to borrow money to go to long Bitcoin in this case, or you'll be receiving that if you go short. So really important to know that the funding rate is there and you'll be paying it if you're going long. So you have to put that into your calculations when trading. The next thing you're going to want to do is set your leverage ratios. This is really important to make sure you don't get wrecked if something happens, and you can do this yourself. Now every futures trading screen and every futures provider will have different amounts, but what we really want to do is choose how much leverage. So what we can see here, I just clicked on this up here. Long or short, it's actually the same, so it's gonna pretty much give you the same screen, but you can set your leverage ratio. So how much leverage do you want to be using here? So 10 times leverage, it's quite a lot. You can actually get up to 100 times leverage if you go through some extra steps with ByBit. That is a ton of leverage. You're going to get absolutely wrecked if the market even moves a little bit. So when you use leverage, all your positions are multiplied, right? So you make way more when the price goes up, and you can wreck way quicker when the price comes down. So how much leverage do you want to use? 10 is probably the max, so I would say everyone is their own position. You can use as much or as little as you want, but you can obviously set this right here. So I'm just going to do 2 times leverage like this, and I'm going to confirm this. So what you can see up in the top now is that is changed into 2 times leverage. Obviously, the more leverage you use, the more risky things are, because essentially you're borrowing way more money and your positions are just obviously exploded in a way more if you're using way more leverage. Next thing you want to do is sort out your margin in terms of funding your positions. There's 2 things you can do. You can go cross, you can go isolated margin. So cross margin, we'll click it here. Gross margin, you can come and read this. I'm sure it tells you cross margin is when essentially all of the positions that you have. So let's say you have a long in Bitcoin, you have a long in Ethereum, and you have a long and ADA. Now that's 3 different positions. They're all going to be up and down in different positions. Do you want the money on your account to fund all of your positions at once? So let's say that you have $10,000 in account and you've got 3 open positions. That $10,000 will be funding all those positions at the same time, and they'll be drawing down on your margin, or you'll be making money that's cross. Or you can isolate your margin, and this means that you have to essentially put margin on account for each position individually. This is a good way to mitigate any risk from one of your positions blowing up, so that your whole account doesn't blow up. So if you isolate margin, you can, let's say you have 10,000, You can put in 3,333 for each position, and then if one of them blows up, your other positions are still there. So I would suggest using isolated. Of course you can choose whatever you want, but isolated margin 2 times leverage. We just press confirm right here, and we've just taken a ton of risk off the table. When you are looking to get into a position, you are going to have to do a lot of risk management. So the first thing that you want to do is use an order calculator. ByBit have one, and it will tell you everything you needed to know about stop losses, positions, and everything like that. This one's actually really good. So let's go through it. So let's say that we're using 2 times leverage like you saw me put in. Now, how much you want to trade, this is up to you. So what this is going to do is basically tell you where levels are, if the trade goes against you, when are you going to get stopped out. So let's say that's the current price, and then the closed price, let's say 1,000, right? So we're in the profit. If your initial margin, you can see the quantity we are trading is 0.002, which I think is about $200 worth as a position. You only have to put $50 on because I'm margining up, right? So I only have to put on $50 worth of USDT, and I've got a position that's more than that, right? So the quantity of Bitcoin I'm trading is 0.002. How much will I make? You can see my profit here, my profit and loss percentage and ROI. If you go to target price, what you can do is like a percentage ROI, right? So let's say the percentage ROI is like 20% or something. It would tell me where the price has to get to. If I want to make 20% of my trade, that target price is 1,000. So if I say, right, I want to enter a trade now, I want to make 20%, it's going to tell you what is the target price to actually set your sell order out. You can change that for long and short. Liquidation price, again, it's going to tell you essentially, if the trade really moves against you, and let's say that you enter at 1,300, at what price you are doing to get liquidated. So when you trade on leverage, obviously you can't just open positions at some point. If you're losing too much money, these systems are basically just going to shut all of your positions, close you out on a loss, and take all your money out of your account so that you can obviously have a debt. That will be a liquidation price at a loss, right? And then the entry price right here, you can do this, right? So you actually go at long, put it your entry price and filled quantity, average entry price. So essentially you can work out, like if I have some entries, put some limit orders in, let's say I put 3 limit orders in a certain prices and I get filled on them. What would be my average entry price for that? Not that useful, that one, but profit loss certainly is. So that's how to use the order entry calculator to really get in your mind some of the risk that you're taking and some of the levels that you may need to put your stop losses and take profits up. We're going to go and enter some orders, and then we're going to enter into a long or short trade, and then I'll show you how to put a take profit and a stop loss, and also kind of some ways to know where you should put those. So we're going to go over to the screen right here, and I assume you know what market and limit orders are if you're trading futures. So obviously market order is where you just enter trades and amounts and you don't choose the price that you pay. And a limit order is where you have full control and you put in the price that you want to trade out and the amount that you want to trade. Futures are a little bit different, like I said. We're trading on leverage and we only have to put in a small amount of the funds to fund the trade that we are doing. So this is a terrible time to put an order, and you can see this price right here is right smack bang in the middle of this range. And so it's just somewhere where I wouldn't really trade. I would like to see the price. If I was going long, maybe I come down here and then maybe starting to bounce off. It would be a good way to kind of hopefully ride momentum up into the mid price or up near here. So terrible time to put an order in. Order price, so you can choose this. Obviously you're gonna have to choose a price near me where it is trading. So let's put 8.185, so we can click on that. And then now, how much do you want to trade? You can come down, actually trade the amount of funds that you have an account. So let's do 10% or 25%. You can see that. So the order value right here, you can see it's about $96. So you can change that any way that you want. So let's do 0.001. So that would be an order value of $48. You can see that you can open long and open short right here. So I'm going to have a limit order, and we want the limit order to obviously be hit at 185. We're now below the price, you can see, and then you can go through and open that loan, and that limit order will be put in for you. So what we'll do is just put a crazy price, $1,000 right here, and obviously you can put this limit order in. So we can come down here and just say open loan like this, and it will show obviously everything here. So 45,000 is the price we want to get in at. We're going to trade 0.001 Bitcoin. The order cost is here, the value is here, and everything like that, and it's an isolated margin. So you can click this off. If you want to trade quickly, just click this off. I'm going to click confirm like this, and that limit order should be put in for us. So what you can see is an active trade right here. It hasn't traded yet because our price is way below the current price, and you know our order price is 1,000. You can see that we're miles away from that. So that is essentially a working order for us, and you can say field 0. Alright, so you can have this here and have this working. The way that you cancel this order, just come over, press cancel, and that limit order is no longer there. So that's what a looking order would look like. Now what we are going to do is actually enter an order with take profit and stop loss. I do suggest that if you're trading on leverage, because this is going to mitigate some of your risks. So exactly the same parameters, and we're going to go through. So let's say we have an order price of 45,000. Want to trade this much. Now if you're going long, you can press this button here, buy long with TP or SL. TP is take profits, SL is stop loss. How would you determine where you want those to be? Well, if I'm going long right here, I'm right in the middle of the range, like I said. Very quickly just put in some level zone. I would say a stop loss would be around $1,000, right? So we're at the bottom of the range, and to be honest, I'd probably just come down a little bit more to give yourself a little bit of breath and room. You can actually see that there's some wicks down here that bring it even lower, so it depends where you want to take the risk. So that would be your stop loss, alright. So if you go long right here, when do you want your stop loss to come in, right? So that will be that. If the price goes down here, maybe you've made the wrong trade or it's falling down, so you stop any losses, trade out of loss. But you can put that in right when you're trading. The next one is the take profit, and again I would say, you know, level up here and kind of round 5. So that would be your take profit. So that is how you would enter an order with both the take profit and the stop loss. Now that's sometimes called a bracket order as well. Then you basically go in, and then you have your profit and loss set for you, and that will work on the system. So when you actually enter 3 orders here to go through, and it'll be just working for you each time. So you can put that on. You can say, yep, I like these levels. If it moves against me, I'm going to sell out at a loss. If it moves in my favor, the system will automatically trade out for me. One thing is really important with futures as well as closing your positions. So like I said, with futures, you're trading a contract and your position is open the whole time, and it's not like the spot market when you just buy and hold stuff, and that's great. If you're going long, like I said, you're always paying those futures the funding fees, and so you may need to reduce your position or close your position. The way that you do that is not actually shorting, but you can see there is open and closed right here. So when you're open, you can either open a long or you can open a short, and you can actually have 2 different positions, a long and a short open together if you want. But how do you actually reduce a position? Like, let's say you're a long Bitcoin and you actually don't want to be a long Bitcoin, you only want to be a long half of Bitcoin now. So you are going to make half out, you close your position. So you can see here, let's say for example I'm long 1 Bitcoin and I want to reduce that position. I can very easily just put 0.5 and then close long. If you're long 1 Bitcoin and you tell the system to close half a Bitcoin long, you'll be left with half a Bitcoin. So that's how that works. You can close your position, you can reduce your position, or we can close the whole thing depending on how much you have. And then if you are going short, you got a short position, you can close your short right here. Choose how much you want to close, and that's how you do it. So it's a little bit different with the futures markets compared to the sports market. That will get you up and running trading futures and using leverage on ByBit. Though if you want to get started, just click the link in the description. You can sign up without any KYC, just with an email address for now anyway. Also check other helpful videos in the description. If you need them, there will be a lot down there, and check some playlists on the channel for trading and how to trade as well. Cheers for watching, and I'll see you in the next one.